Kia ora, everyone. Welcome to this episode of the Binance New Zealand Ask Me Anything series. I'm Ben Rose, General Manager of Binance New Zealand. And today I'm stoked to have Shane Brunette, CEO and co-founder of Crypto Tax Calculator, join me. G'day, Shane.
Thanks so much for hosting, Ben. Appreciate it.
Hey, so our users often have questions about their tax obligations. We thought Shane would be a really good person to help us dive into the topic. So let's kick off things with an introduction, Shane. So tell us what Crypto Tax Calculator is and how you came to found it.
Yeah, totally. So actually I was building out a decentralized exchange back in 2018. Ran into some regulatory issues. It was quite new technology back then, and we were trying to build something that was securities related. Just way too early for its time, essentially. But was pretty deep on the DeFi and DEX trading, etc., before it really took off, and was left with my own tax nightmare, essentially. And quite a few of my peers also had a tax nightmare. I thought I'd write a pretty simple script. I was fairly naive to the complexity behind crypto tax when I started. And my background's as a software engineer. Thought I'd write a script to help myself and other people. Released it on Reddit. It got pretty popular. But little did I know that it was going to be about 4 or 5 years still working on it. There is a lot of complexity there, which I'm sure we're going to cover off in this call.
And so, who's in your team? Tell me about the structure of the team and the business.
Yeah, so I actually founded it with my brother Tim, who's also a software engineer, and then we brought on Harrison Dell, who's previously a tax auditor at the ATO, which is the Australian Tax Office, and he's quite familiar with the audit process, I suppose, and what actually like the tax authority will look for to try to pull apart these records and find holes in the data, etc. And then we built out the team. We actually got backed by a couple of VCs back in 2021, and been about 38 people in the team at the moment, and really just focused on building and solving this pain point around crypto tax, which I'm sure a few of the listeners have ran into.
It was really interesting. So we did a call for questions from our users, and we got a whole load. So with the end of the tax year approaching, some of these things are really top of mind. So let's jump into them. The first question is, can you give us a quick intro to crypto taxes in New Zealand?
Yeah, certainly. So in New Zealand, it's a little bit different to other parts of the world. They don't really have a concept of capital gains. They really look at the intent of the transaction. That's the essence of it, and whether you went out to try to make money or not. And I'd say probably the bias, if you're transacting in cryptocurrency, is that you're doing it to try to make a profit. So most of the time, in pretty much most circumstances, any kind of gains or losses, they're really considered as income. They're not going to fall into that tax-free kind of bucket that you might get from selling a property, etc. So you really do need to keep track of all your records and try to work out what your actual gains are, because you do have an obligation to pay the correct amount of tax, essentially. And the IRD is starting to get more active, I suppose, around this space.
Well, that was actually one of the questions was, can the IRD track crypto on the blockchain?
Yeah, absolutely. So if you think about it, I mean, there's obviously centralized exchanges such as Binance, and they keep their own internal transaction histories, etc. So that's fairly well understood. Just like, if you transact with any broker, there's a record of what you've been up to. If you transact on the blockchain directly, say you're doing peer-to-peer trading on a DEX or something like this, or an NFT marketplace, the actual ledger itself, the blockchain, is the proof of all these records. It's not actually anonymous. It's more pseudo-anonymous, but the thing is, you can easily map the wallet address back to your brokerage account. There's a lot of services out there which do this professionally. Typically, it comes from the KYC AML space, so the same technology that tries to prevent terrorism on the blockchain and that type of stuff. That can be repurposed for tax audits, essentially. And so it's not really about the IRD having internal capabilities to be able to track everything on the blockchain. Like, yeah, of course, it's going to be pretty difficult for a government to come up with a custom solution at the best of times, but they don't have to. They just source it from private companies who specialize in this, state-of-the-art technology. So you can easily track basically everything that's going on, and you can quite quickly, when you go through an audit process, find holes in the data and be able to isolate where you might not have declared a particular wallet, etc. So it's pretty much like the worst place to be if you're trying to get away with not doing your taxes. It's like all permanent on the blockchain. Anyone can access it. It's immutable. The government doesn't even need to have a subpoena. It's just there. So it's pretty not that sophisticated if you think that you don't have to pay taxes because you're transacting on the blockchain.
So in a New Zealand context, what would be the most common taxable events Kiwis have to think about when they're interacting with a centralized exchange, for example?
Yeah, so I mean, the obvious one is if you go out and buy, Bitcoin or ETH or any other popular cryptocurrency with the intention of making a profit at some point, which is probably really the reason why you're doing it in the first place. Then when you go to sell it, you need to consider the gain or loss, and that will impact your income essentially for that taxable year. There's a variety of other things that can happen though, such as airdrops, staking rewards, if you're trading NFTs, etc. But the nuts and bolts of it is, did you make some money? And then, that's probably taxable. And it's not just taxable when you cash out, like back to your bank account. That's a misconception. It's taxable every time you do a transaction. So, every time you say you buy Bitcoin and then you go sell it for ETH, even though you haven't gotten any more money in your bank account yet, but your brokerage account is up a few $1,000s, well, that's a taxable event. And basically, you need to keep records of every single transaction that you've done and try to work out what they call the cost basis, like what was the cost of that transaction and what was the gain or loss when you sold it, like what's the difference. It's basically addition and subtraction, really. And then once you've got these kind of calculations in place, it's actually pretty simple to work out what your final tax obligation is. But the really hard part is just getting to that number and having the records in the first place.
So we had a user ask, if I'm dollar cost averaging into, say, Bitcoin, and I go to sell, how do I identify the gain or the loss? Is it done on a time period or in some other way?
Yeah, it really depends on your inventory method. You've got a few different inventory methods, like there's average cost basis, but there's also more advanced ones like first in, first out. So you can actually use software like Crypto Tax Calculator to try to work that out for you, essentially. There can be some nuances. The most important thing is to try to get all your records into the system in the first place, and then let the calculations, let the software run the calculations, essentially.
Got it. Easy. Let's talk about self custody. So if somebody decides to transfer, their crypto onto their own wallet off an exchange, what's the impact there on their taxes?
Yeah, so if you still have beneficial ownership of the asset, there's a strong argument to be said that it's not a disposal event. Like you still own the asset, you're just moving it between accounts, etc. And it's very unlikely that that would be considered a taxable event. There's some things to consider though, such as if you are disposing of cryptocurrency to pay for a fee, like a mining fee. You've got to transfer between wallets, for example, and you actually just have to pay the fee to do that. And there can actually be a taxable event on the disposal of the fee. So, for example, say you bought ETH for $1 and then you have to go sell 0.1 of it to pay for the gas fees. Well, maybe that 0.1 ETH is now worth $100 and there's 99.9 cents, $99.9 actual capital gain on that fee.
Yeah.
So it's a little bit complex. And again, it's a little bit of a nightmare when you start to think about it too much. So yeah, really just important to keep the records in place and have appropriate software for it.
What about lost or stolen crypto? How do you handle that?
Yeah, that's actually very topical at the moment with FTX and Celsius and a
Mm.
few others. It's actually really nuanced. If you've got a reasonably significant amount of funds locked up in one of these platforms and they're going through a bankruptcy process, it's not actually as obvious as just writing it off as a loss. I
Mhm.
mean, you could do that, but probably you want to talk to your accountant because there are these rules around bankruptcy, and there could be at some point you might be able to get some of the funds back. And so, actually, when you get some of the funds back and it goes through the bankruptcy court, only then can you declare it as a loss. So, it's actually really nuanced. And if you have gotten caught up in that type of process, really the best call to action would be to talk to your accountant. Don't just think that you can write it off as a loss immediately. Um, there might be more nuances, and particularly if it's a significant amount for yourself, it's even more important to do that correctly. You don't want to write it off as a loss and get penalized. You've already lost your crypto on FTX, for example, and then you get slapped on the wrist from the IRD for not doing it properly. It's like double whammy. So just maybe talk to an accountant. They do deal with things like this. Like it's not like it's only crypto that goes bankrupt. You're kind of falling into this bankruptcy kind of rules. So yeah.
And so, talking about accountants, obviously you guys run a self-service platform, but I suppose, what's the role of accountants in crypto these days?
Yeah, I think accountants are really important. We actually work with a lot of them, like H&R Block, PwC. There's quite a few, and they're getting a lot better. I'd probably say, like 2 3 years ago, it was hard to find an accountant who knew anything about crypto.
Mm.
Um, you'd have to go to these crypto CPAs or crypto accountants. They're extreme specialists, typically a tax lawyer background, and I mean, they'd hack off your arm by the time you get out of the office there with the fees which they charge you, which is fine. It's a very specialized service and, obviously high demand for a narrow niche. But I think as crypto's seen more adoption and there's more and more, I'd say, mainstream accountants coming into the market, more of them are more aware of the complexities around crypto, and they're actually, we sell into a lot of the accountants. They'll actually be using our software on the other side. So if you do sign up to our platform, you can add in your accountant. You can collaborate with your accountant. We actually actively encourage you to do that if you are filing with an accountant. We just a strong believer in being able to also file for yourself. Might not have the financial means to pay for an accountant.
Mm.
It might not be convenient. You might be an expert. So really, uh, a bit of the libertarian in me in terms of allowing the user to make that choice for themselves.
Yeah.
Um, but the important thing that we do is give you the records so that you can work that out or talk to your accountant rather than pay your accountant to do all the record keeping for you,
Yeah,
which is
got
dog's breakfast type of work. So
it. Yeah. Okay, and let's talk about NFTs. We had a question asking how does Crypto Tax Calculator read and handle NFT transactions?
yeah, so NFTs are all happening on chain. So we pick all of those up depending on your network that you've been trading the NFTs
Mm.
on. So if you're trading on the Ethereum network, like via OpenSea, or maybe it's Binance Smart Chain, it might be Solana, for example. And then you go and add in your public wallet address, and then we pull in the transactions, including those NFT transactions. We've actually there is some complexity there on how you manage the UI when it comes to NFTs, but we go to great lengths to make that a lot easier. Identifying the NFT like individual NFTs rather than just the collection itself, like things like that. There's devil in the detail, which we've focused on making it easier for users. But yeah, it's essentially like DeFi, it's NFTs, it's all happening on chain. And really what you need to do is add in your wallet address and then we'll read it off the blockchain, similar to, I guess, how the IRD would be doing it if they were going to do an audit. So, yeah.
And how would you establish the current value of an NFT for the purposes of the calculator?
Yeah, so typically, I mean, you'd have to purchase the NFTs somehow. Um, so that would give you a good indication of the market price. If you're trying to get a valuation at the end of the year for tax purposes, then you could look perhaps at the floor price or the characteristics of the NFT. If it's a significant NFT, you could go to the lengths of getting an independent valuation. I do see a lot of people just marking it to the original price that they purchased it and leaving it there. So it is a bit difficult because it's kind of falling into that collectible bracket. Again, it's one of those things where if it's a significant amount of money, it's probably worth talking to your accountant about specifically about like some rules for evaluating that. Because there's the other thing to keep in mind is that NFT is just a protocol, right? Like it's non-fungible token. What is the NFT? Is it a piece of art? Is it representative of a property, like a house, for example? You're probably increasingly going to see more and more use cases for this protocol. And so kind of like, how do you handle tax on a digital certificate? It's like, well, I guess it depends on what the digital certificate represents.
Yeah, totally.
So just have a think about that. It's probably, not as arbitrary. That's first things to get some records in there, which is how we can help.
Okay. Last question, and I think it's a bit of a hopeful one from a user. So, crypto purchased with the intent to earn income, can it be non-taxable?
Probably not. Like if you're really intending to make income out of it, then you've kind of got. It's kind of like the tax office. They don't like hindsight bias of saying, I never meant it to be income in the first place. Like after the fact, you probably want to document pretty clearly how this isn't meant to be income before you purchase it. So you've got that kind of trail of record, rather than what they really don't like you doing is looking after the fact and trying to work out how to minimize your tax liability and create a narrative that suits basically your taxes. They don't have a strong preference for allowing that to pass through an audit. So, and they're pretty wise to it. Like you don't have to be that smart to work that one out. So
yeah, fair. Well, Shane, I think that brings us to the end of our session today. Before we finish up, though, are there any key messages you want to share with New Zealand crypto users coming up to the end of the tax year?
Yeah, I think for when we go out and talk to New Zealand users, like there's still a misconception that maybe crypto is anonymous or it's not taxable. We've seen that mindset play out in a lot of other markets. The IRD, we're aware that they're planning on getting more active. Initially, they start off with education and then they bring out the stick, so to speak. In these circumstances, it's a lot better to be proactive rather than to cop it on the head with the stick when they do bring it out. And if you're feeling like it's a little bit overwhelming, the biggest obstacle is just starting, like it's the inertia. So if you just actually get going and get started, start adding in your wallet, start adding in your exchanges, connect your Binance account into a platform like Crypto Tax Calculator, it's going to get a lot more easier to manage, and it's just going to be a massive weight off your shoulders. So just like kind of get through it. I know it doesn't sound super fun. There are some added benefits at the end, like you've got a full trading history. It's almost like a trader diary. You can keep it up to date. You've got a full overview of your portfolio across all your different accounts. So there's all these nice to haves after, and you'll be able to sleep easy at night. So that's also an added bonus.
Awesome. And if users want to find out more about Crypto Tax Calculator, where should they go?
Yeah, cryptotaxcalculator.io. Just exactly how it sounds. You could just type into Google, you'll find it pretty quickly.
Awesome. Shane, thanks so much for your time. Really appreciate it. And I hope everyone watching has enjoyed the session too. Tell us what you thought in the comments below. Don't forget to subscribe to our channel so that you can see our next AMA session coming soon. Thanks, everyone. Bye.
Thanks, man.